My name is Scott Simpson. I'm the Senior Vice President at Capital One Trade Credit. I was also the former CEO of Blue Tarp, which was acquired by Capital One about 3 or 4 years ago. The title of the discussion is Seize the AR Moment. I'll admit I had some help with the title. It evokes Robin Williams' Dead Poet Society. What we're about to talk about is actually no less profound in terms of what's happening right now in business and business trends. So for me, a personal story, most people can point to moments in their life where they had a moment, event, and a scenario where before that and after that, things were very different. And so that tends to be true for people. In business, transformations happen, but happen in a different way. And we're in the middle of one right now. And so it's a little bit like Ernest Hemingway. If you've ever read Sun Also Rises, there's a quote there with one of the characters where the guy asked Bill, how did you go bankrupt? And he said, gradually and then suddenly. If you think about purchase patterns of buyers, they tend to be assumed that they're always the same and not changing until they do. There's an infinite number of examples, but a couple of ones are like I'm of a generation where if I needed to go buy something, I would go to the mall. Now, I haven't been in a mall in 10 years. Just by show of hands, how many people have been in a mall in the last year? A couple. That's good. Same thing. I still remember the Be Kind Rewind, Blockbuster Video everywhere, and the way in which you consumed movies was in that way. And now you can stream everything. I use this as an example because certain things we assume to be true are true until they're not, and that's no less true for B2B and buyers. And so there's a pretty dramatic change going on. And I've spent the last 20 years in business-to-business industries. And what you can get a sense is that the traditional buyer and supplier relationship is just changing. It used to be that, if you, and I use supplier, merchant, interchangeably, things like that. It used to be, though, that, local buyers would find local suppliers and the proximity was really tied the relationship together. And over time, especially with the advent of internet and buying and especially accelerated by the pandemic, you're just getting a different dynamic that emerges. And, nearly half of buyers feel less loyal to their B2B sellers than they used to. And you're finding a rising and a rapidly share of formerly, purchased local products being purchased on the internet. And so that does not to say that's always going to be true or that's not internet's going to take over everything. But one of the things that's very true is that there's a new front for competition for customers. If you think about it, in the last 15 years, you can do everything from your phone as a consumer. You can buy online, you can research online, you can apply for credit online, it's instant decisioning, you can get all of that. In some cases, in the same exact store or retailer that you might be buying from as a consumer, if you're a business buyer, you have a very different experience. If you want an in-house terms account for their accounts receivable program, paper app. Just take a couple hours or a couple days to get a feedback. If you wanted to buy online, you might be able to do that with a credit card. It's paper billing, sent through the mail. If you had questions on your bill, call during store hours. Again, very traditional, very much the way people bought for a long, long time. But it's not what consumers want or what business buyers want any more than what consumers want. So you see at the bottom that 2/3 of business buyers are expecting the same kind of experiences they have as B2C. So when you think about accounts receivable, it doesn't sound like the sexy front for competition, but I'll point you to a really good example of somebody that's weaponizing convenience. I use Amazon because everybody obviously knows what they've done in the consumer space. And from a standing start, in less than a decade, they have $35 billion in their B2B program, largely by providing quick credit approval, 60-day and 90-day terms, information to reconcile invoices, things that just make it easier to buy from them. And the $35 billion didn't come from nowhere. It came from local suppliers. I use this, again, not because Amazon for Business is going to take over the world, although I'm sure they'll try. But I think they're pointing the way towards how to win customers through experience, through convenience. That's what motivates change. And so the premise, a little bit starkly labeled, is that if you're going to have a manual accounts receivable process, it's a clear and present danger to keeping the customers you have or winning the ones that you want to go get. So I'll go back to the analogy I had around the how'd you go to bankrupt. This is going to be gradual until it's sudden. And so I'm not here to debate that this is a trend. This is a trend. The question really is what you're going to do about it. And are you going to be taking action so that you both preserve your accounts and your customers and win new ones? So the other challenges with accounts receivable, aside from the manual experience, is that there's just natural problems with, or structural challenges with getting paid and cash flow, as you all know. So if you sell product today or have a service today and you get bought, and that's purchased, you may not get paid for 30, 60, 90, 120 days, or you may not get paid at all. So if you're managing your accounts receivable and have done it in the same way traditionally, you're exposed to those things, losing customers, the cash flow drain, and the risk. And unfortunately, those risks aren't getting easier to manage. So this is an environment where if you look on Wall Street Journal, you're going to hear things about threats of recession, probability of recession. On the left-hand side, you look at the 10-year bond note, and when it's below the 3-year bill rate, and you sort of see that, like, every time that occurs throughout the last several decades, it's preceded by a recession. Every time this has happened in the last 30, 40 years, within 12 months, there's a recession. So, like, the risk of non-payment going to get worse. We've also all seen interest rate rising, and that's not a trend, unfortunately, that's going to abate soon. So the cost of money, the cost of not getting paid quickly, it's more expensive for you each time. So that's the problem. I mean, the good news is there are solutions, and I look out in the hall, and I'm overwhelmed by the number of options that are available to help merchants and suppliers address some of these issues. And there's a couple different categories that I'll speak to. One is AR automation software. As I said, there's an infinite number of examples in this hall. And there's also end-to-end AR solutions, of which Capital One Trade Credit is one, Citi, Synchrony, TreviPay, others that would provide a full service, and I'll explain a little bit more what that is. And so AR automation software, end-to-end solutions, there are different fixes to this problem. So if you think about in-house, again, if you as a merchant or supplier want to challenge and fix a manual clunky process or the cash flow drain of the risk, AR automation solutions, they're point solutions. They're easy to adopt. They're software modules, so you can kind of pick and choose. I want help with my cash applications, or I can help with collections, or I can help with pieces of that order-to-cash cycle. And they will improve DSO. You'll see that as a value add very clearly. It's also work that you are doing and your team is still doing to manage your business. It also doesn't address the things that you still bear the cash flow risk, you still bear the risk of not getting paid. In contrast, if you think about end-to-end AR solutions, this is a full service from start to finish. So you're in control, but it's a modern, digital, automated experience. You are paid up front for all your transactions, and effectively you offload the credit risk to a company like Capital One or Citi, Synchrony, TreviPay. They're different solutions for some of the same problems that we just talked about. So as I said before, like, the choice here isn't really whether, as I said, this is a trend that will go away. I think I'll take the bet that each year, every year, these demands for better, more automated experiences, more digital, more online, are going to rise. And as I said, the real question is sort of what choices you want to make about where you want to stand in that. To dig a little bit deeper into an end-to-end solution, just so you know what I mean, and you think about what the customers are actually asking for. If you apply online, they want instant decisioning, and especially if you have an online presence and an offline, they want to be able to get credit and buy from you that day in that session. They want to make it easy to apply for larger lines. How do you make it simple for them to buy from you? Self-servicing, in the 20 years that we've been working as BlueTarp and Trade Credit, I've yet to meet a merchant or supplier that has built out their own online digital servicing. You would expect that from any customer, as a consumer from any site, but it just doesn't exist out there without help. So they're looking for that. They're looking for 24/7 access. They're looking for the ability to choose how they're engaged with you, who on your team they should notify. The people that usually buy from you and the people that actually pay the bills are different people. And so how do you route communications? How do you make sure the right information gets to the right people? How do you allow multiple authorized purchasers? How do you allow people to change those at any point in time? How do you allow them to dispute invoices? Things go wrong. How do you make that simple for them? The simpler you make it for them, the more it's going to be like, wow, it's really easy to buy from them. Even when the challenges are there, like disputes. Nobody really wants to handle disputes, but they happen. And when they happen, those are usually fissures for relationships. So, the last thing too is that, open item application or open item cash application. So having the SKU level data, if they have to call you for a download or to send an invoice versus it's uploaded right into their AP system, again, you're making it harder for them to do business with you. So that's the experience part. I can also just say the end-to-end AR solutions can also directly help you win sales. So number one reason why suppliers don't offer 60-day, 90-day, 120-day terms, especially for best buyers, is it makes the cash flow and the risk a lot harder to manage. So if I have a big buyer and they're spending a ton of money with me, every month I give more is a bigger challenge for me, a bigger drain. If you have an end-to-end AR solution, you're going to get paid up front, and you could offer that 60 or 90, 120-day or longer terms so that you get the best of both worlds. You're not managing the risk, you're not managing the exposure, and you'll be able to go win the businesses you got. And that's what, again, an end-to-end solution will offer you. Some solutions like ours will also do pre-screening. So, and I don't just mean pre-screening for credit accounts, but pre-screening to help sales and help you win sales. So we can tell you the size of a target you're going after, whether they're credit approved, and you can have your salespeople walk in and say, hey, look, you've been buying from this guy for a long time, but come over here, we can offer you 60-day terms, 90-day terms. Your account's already set up. Let's get together. So again, direct ways we can increase sales for you. And I'll close just with a little bit of, we sort of skipped over trade credit and who we serve. We're there to help businesses grow. We're there to help increase sales by making it easier for them to buy from you. They're your customers. And we serve 1,000 merchants across the United States. You can see some of the logos that people know here. So if you're middle market or enterprise or larger and seeking a different way of doing business, this is something that might be for you. If not, I'd say take a look at the AR modules, take a look at the AR automation software, whatever it is, take a stand on what can better position your business. And just a quick case study for us. We had a national retailer who was going after 10 to 20, 200 employee businesses, and they had operational processes that they couldn't really manage, and they really required instant decisioning, and they required 60-day terms, and they required something that's integrated into how they do business. We were able to install our offering, not the way we do it, but the way you do business, and they were able to have 100%, nearly 100% instant decisioning. And you look on the upper left-hand side, a 30% increase in growing sales. I can promise you, every time you're able to show, wow, I can grow sales, it's not a back office question anymore. It's not this is the way we always do it. It's a new way of doing business. So back to the premise. Whatever, again, you think about the transition of AR, automation. I see a lot of AI. There's change coming, and it's been gradual, and now I think it's about to get sudden. So that's all I have. If you guys have questions for us afterward, we're in booth 124. I'm also happy to stay up here if people have any additional questions they want to ask. Thanks.